This is Talking Capital Markets, where ideas drive the markets. We move past the headlines and into the heart of the deal, breaking down IPOs, M&A, governance, and the strategies driving real growth in today's capital landscape. No noise, no hype, just conviction, execution, capital in motion. If you're building companies, raising capital, advising boards, or deploying investment, you're not just listening, you're in the room. And now, here are your hosts, Mike Blankenship and Brian Jue.
Welcome to Talking Capital Markets with Mike and Brian. I'm Brian Jue and my fantastic co-host, Mike Blankenship.
Hey, Brian, how you doing today? We talked last time on all different topics, but today let's hit on one issue that I see come up quite a bit is the listing when you go out and list on a particular exchange. I would like to get your feedback on this. So, you have Nasdaq, you got NYSE, and now you've got Texas Stock Exchange coming in. In fact, Texas Stock Exchange forced NY and Nasdaq to now come into Texas. Just last week, you saw Nasdaq ring their opening bell from the Alamo down in San Antonio here in Texas. So where do you see the evolution? Because certainly on the microcap space, we've seen NASDAQ pull back, increase their size from 5 million to 15. You've seen them put out interpretive materials with 2101-3. Lots of numbers there, but basically it can turn down an issuer for basically any reasons. And mostly we're seeing that as non-US persons being stopped. So how do you view it? And is there a favorite and the ones that you look at?
I think when it first came out, what NASDAQ was doing, it was pretty clear and pretty obvious that they were trying to put a lid on a lot of these foreign issuers coming into the country that, a lot of people don't like to talk about it, but for all intents and purposes, they're just trying to move money out of their countries. These companies never had anything to do with the United States when it comes to an operation. And even when you have financials done by a big name law firm that's overseas, it's not the same as over here. It's, apples and oranges. It's very different. So for an investor, it's almost impossible to figure out what you're actually getting into with these publicly traded companies that are just completely foreign issuers. And I don't mean to be painting them all in a bad light, but there was that element and it was pretty clear that's part of what they were looking to do. But, unfortunately, like everything else, there's a trickle down effect. There's a cause and effect. You do something, it hurts others, like all the way back to Sarbanes-Oxley. I mean, the reasoning for it made a lot of sense. However, what it did is it made it almost impossible for so many smaller companies to go public. To your point about this, yes, that limits it, but I think the Texas Stock Exchange, I think it's exciting. I think having another venue, another place where a company can go and look and see and feel, is this the right place for them? And as far as the argument is one better than the other, I really think it just depends on a whole combination of circumstances, including who your advisors are, who your bank is, what investors are you dealing with? Where's the capital coming from? For the IPO, are you doing a direct listing or is it going to be underwritten? I think all those things matter. And I think more choices absolutely matters. And clearly Nasdaq and the New York Stock Exchange have taken what's going on in your state very seriously. Otherwise they wouldn't be there.
Yeah. And when it comes to foreign private issuers, I mean, we're seeing the changes even at the SEC. We recently put out a post on the requirement that directors and officers have to file Section 16 reports. Now, what those are, those Form 4s, which list how much they own and how they own them and when they got them. So getting an RSU or restricted stock unit grant, getting that, into that information. One interesting thing, Form 4s do give all that information. The plaintiffs bar is very active and watching these because oftentimes we see, they'll buy particular shares of their company that gets listed as Form 4, and within 6 months they'll sell. So therefore, there's a disgorgement of profits required under the rule. You can't have this, two-way transaction. So it makes it a little difficult. Question or wonder is what's going to happen with the foreign private issuers that may not understand that and so used to their home country rules, which I know the SEC also put out an exemptive order that has, if they already have that requirement to list, then they don't have to follow the Section 16. But a lot of these foreign private issuers that are in other countries don't. I mean, they might be Cayman Islands or BVI, and they don't disclose their ownership. So it's a little interesting effect on the foreign private issuers there. So I think as we see some of that, and those guys come into the United States and try to get that capital, as I think we noted before, about 5,700 public companies out there, and about 3,400 of them are U.S. The balance is non-U.S. companies. So we'll certainly see where that goes. But I definitely interested, because you do see in the smaller mid-cap space or micro-cap space, a lot of those foreign private issuers. So they'll continue to kind of shift, and maybe they come to Texas. I don't know. I think it's obviously I think it's a great state, but the stock exchange rules, and we'll put out information, sort of the listings, the requirements for all of them. It is something that's an honor, privilege to be listed on these, because the trades and everything else. We'll see. And part of all of this was the halts that the SEC put on there. I don't know if you saw that, but there was a lot of issuers out there with those halts, and became a problem. So Nasdaq put out another proposed rule to allow delisting upon a suspension from the SEC. Note, the SEC's suspension is temporary; a delisting wouldn't be. So certainly see where the market going. Hopefully, a lot of this doesn't have like a chill effect on issuers. Certainly, we need more, and I think we've talked about forward direct listings are a good way to do that. I don't know what you're sort of seeing or what your thoughts are on that market, but I do think great to get more U.S. issuers. That's why we see a pretty robust SPAC market right now. We're wanting to get more out there. We're seeing a lot more direct listings, as we talked about. We're not seeing as many traditional IPOs, but I think there's a lot out there. I don't know what your sense is. What are you seeing?
Well, I think in regards to the foreign private issuers and their situation, I think there's an easy path to resolution for a lot of them. They just got to want to do it. They have to be able to want to do it, and they have to be able to be willing to engage the right advisors. If they're just dealing with the same advisors who are telling them to continue down the same path, well, eventually it's not going to work anymore. There's only so many times that you can reverse your stock, go back to the well, and pursue discounted capital, and you just can't keep doing it over and over again. And I think the Nasdaq, New York Stock Exchange, and SEC, they're all kind of tired of that, because for the retail investor, it's just a lose, right? So there is that opportunity. They went through all that time, all that expense, and they have this asset, because it is an asset. Being publicly traded in the United States on a major exchange, that's an asset. Embrace it. Go out, acquire some real businesses in that line of business that you're supposedly in, and make an honest effort to build something. Use the currency that your public capital, being publicly traded, that allows you to use it. And I think that for those that do, they have an opportunity to survive, right? But it's kind of your other point there too, about the percentage of how many are foreign issuers and how many are trading in the United States. I mean, we're at 57 other companies. We used to have well over 10,000 reporting public companies, right? And not too long ago. And there was a feeling that if I'm a company in the United States and I've reached a certain point and I want to grow and I want to expand, that I can use being a publicly traded company. It's not just an exit or a liquidity event for the shareholders, but as a methodology for growth, to raise the capital needed to grow the company, and potentially be in a position for a secondary and an exit liquidity event then. And companies wanted to do that. But right now, we see sometimes more companies that are interested in becoming publicly traded that are from outside the United States than here inside the United States. I'll give you an example. Today, I have a call with a group from Australia. They've got a half dozen deals, all with strong EBITDA, strong top line, that want to go public. They're looking at the United States, versus I'll talk to a company, through our M&A resources, that going public would be a fantastic opportunity for them, but they're just in their heads, well, no, we just want to do a strategic sale to PE. And then when we explain to them, well, the whole PE's exit strategy is to take it public. Why not get some of that arbitrage value for you? No, it's just too much work and the market's down. What? Right? Why are the American companies so blind and so scared, yet we have so many companies from outside the region for not just the other reasons that might be questionable, but for real reasons of growth want to come to the United States. And another point that you had brought up on that note is, 10 years ago, 15 years ago, if you wanted to go public, you could think about, hey, well, we could go in, the New York Stock Exchange, the American Stock Exchange, Nasdaq, we could become an OTC company. We could go on one of the exchanges in Canada. Yeah, there's also other exchanges throughout the world we could look at. American companies were actually actively looking to become publicly traded, and they were looking everywhere. And now we just don't see it quite as much. And I really truly believe, Mike, and you and I have talked about this personally a lot. But I think a renaissance is coming, and I think that a lot of companies out there that are smart and thinking beyond what they see, and knowing that the routes of VC and PE and all these are clogged. They're only there for the larger entities, that going public here in the United States makes a lot of sense.
It does, and I think, part of it is the private equity came in, they were offering these good, potential returns. If you did look at the public market, the market, you could do a lot better, to your point, where you maintain ownership, whereas private equity will take 99%, you keep 1%, for instance, or, very, very small amount, or roll over some amount. I think, looking at the public market gives you some optionality, and that actually probably gives you better valuation on your company as well than a private company evaluation. So it's interesting. I do think the market is still poised to do a lot more. I think there are a lot of companies out there, especially here in the U.S., where you can do, have more optionality now on exchanges, more optionality on various things, which does provide better costs for you, whether it be time, whether it be, financial. So it is certainly a positive here. So that's what I'm seeing today.
I think it's exciting. I think it's an exciting time. And just one thing I'd like to add to this podcast episode is, for those of you here, in the United States that are listening and might be considering some of the things that we talk about, you can't wait to the last minute, right? You have to always be thinking about moving ahead, no matter what's going on, in the world, the economy. Sometimes we hear people say, oh, well, the market looks like it's inflated right now. We couldn't go public right now, or we don't want to go public. Well, does that really apply to you? I mean, because your company, your publicly traded company, is not on the Dow, is not on the S&P 500, right? But even then, you can't time it. It's impossible to time. And if you wait to do anything and you don't prepare, then it's just never going to happen, because it'll never be the right time.
That's right. So you got to be prepared. Chance favors the prepared, right?
Sure does. Well, Mike, I think we've chatted well about this one. Appreciate you as always. Look forward to the next episode. I'm Brian Jue and Mike Blankenship.
Thanks.